Overall, we are expecting that revenue growth is going to improve for middle market firms. In terms of the last year, they have shown a 7% growth in revenue and are expecting a 5.2% growth. Incidentally, in the third quarter, the expectations for revenue growth were only 3.7%. So this is a notable improvement in revenue growth. Relative to the actual experienced rate of growth of revenues, middle market managers tend not to simply forecast it forward as such, but rather to take a conservative approach and set a lower expected rate of growth. Of course, what this means is that for the results of the fourth quarter, we might be a little more sanguine than the 5.2% expected rate of growth suggests. Remember, they are coming from a 7% rate of growth period, but predicting only 5.2%. May we dare to expect that, in fact, the rate of growth of revenues will be somewhat better than 5.2%. The middle market, as you know, has been an engine of job growth in the US economy. Our latest survey findings strengthen that opinion. What we are finding is that in the previous year, in 2012, the middle market added about 1.17 million jobs. That was a rate of growth of employment of about 2.7%. And going forward, we are expecting still further growth. In fact, our survey tells us that the mean expected rate of growth for employment is about 2.3%. That would be adding another million jobs. The expectation is that middle market firms are likely to carry an inordinate burden of healthcare costs. Something like half of them tell us that just because of healthcare costs, they are now thinking of new alternatives to deal with this issue. For example, some of them are thinking about negotiating with the insurers for different setups, or perhaps even changing the benefits that they are going to provide to their employees. One of the important aspects that the center likes to follow is the investment expectations for middle market firms. And in that context, we've asked the following question in each of the 4 quarterly surveys. If you were provided an extra $1, what would you do with it? And what we are finding is that in the fourth quarter, 59% of the respondents are saying that they would actually invest it. And that's a slight improvement from the 56% that said that they would invest it in the third quarter. While we see some positives on the horizon, we also see some hesitation and some concern. Altogether, perhaps we can sum up the scenarios going forward as optimism, but really cautious optimism.